Okay, good afternoon to everyone. I am going to discuss how to analyze an IPO prospectus, which is a very thick document that explains to you what's going to happen to an initial public offering. And in general, I will also discuss how to invest in good companies that usually have good stocks. My name is Alexander Gilles, or my nickname is Sandy. I'm a chartered financial analyst. All right, so part one is what is an initial public offering of shares? And here's the answer. It's a way for a company to raise capital for business expansion. An initial public offering is a way by which a company reaches out to individuals to be able to get money from them for the company to be able to expand the business. In order to attract the people to give money to the company, then the company says, I'll give you shares, and these shares will pay you cash dividends. The good folks who contribute money to the company will be able to earn cash dividends at the end of the year. Here's a picture of a stock market certificate, which you normally get the moment you buy a share of stock. For example, Petron Corporation, 400 shares, you get a document that looks like this, looks like a graduation from college, and it is fancy paper. Up to now, you can get this sort of certificates if you're willing to pay 150 pesos for each print because the paper costs that much. Normally, with this simple plain paper, it's good enough. It's just as convincing that yes, you are the true owner of the shares. When you're the true owner of the shares, you can get cash dividends and you can get invited to speak at the stockholders meeting. So what happens is the company says, we need money, and they're going to talk to millions of people who then therefore individually decide, yes, I will give money to the company, and then the company will give me the stock certificate. So the company takes the money and then they use it to expand their business. Hopefully the business makes better sales and bigger profits so that at the end of the year, all the owners, old and new, receive a share in the net profits of the company. What's the name for your share in the net profits? Answer, it's cash dividends. If the company's profits are bigger and bigger and bigger every year, then the cash dividends also get bigger and bigger every single year, from 1 peso per share to 3 to 5 to 7 pesos per share. Such cash dividends are very nice. And therefore, whoever receives cash dividends from such wonderful shares will spread the word and get all of his friends to buy the common shares also. And when that happens, all the common shares become so desirable that people want to buy that share. And because of the desirability, the price of the common shares goes up. Now, what are cash dividends? Well, these are gifts at the end of the year to the stockholders, which allow you to earn somewhat more than ordinary government bonds. Okay, for example, listed companies like Meralco, DM Consunji, PLDT, they give you ranging from 5 to 7% per year. That's roughly like the yield on a 10-year government bond. I think it's running between 5 and 7. Cirtec Preferred pays 6. Del Monte US Dollar Preferred pays 7.7 for your US dollars. So these are examples of the cash dividends that you would receive the moment you do buy shares of these companies. They were offered at one moment in time. All of these guys passed through the initial public offering. And this is one of the considerations that you should think of when you're about to apply for an initial public offering. Is this going to be giving me nice cash dividends? And will the share price be rising over time? So here's a picture of the initial public offerings anatomy. First, you have the company owners. And then, of course, they contributed shareholders' capital at the very beginning. All that shareholders' capital was used to build the factory, to install the machines, and to buy raw materials for the bodega. And then they do finished products. Now, they want to expand the factory. But in order to buy more assets, they need more money. So therefore, the company owners think, I have to raise capital, perhaps by selling shares. Okay, so this is the beginning of the desire to sell shares to the public. And here's an example of Wilcon Price's IPO at 5 5.05 per share in order to be able to sell so many million shares and to raise 7 billion pesos. All right, so this is periodically it appears in the news. And then you're wondering, should I buy at 5.05? Will it go up? Well, it depends on the prospects for the company, whether it will have better sales and better profits. And in the first place, whether the economy will support stronger sales for hardware and all kinds of bathroom fixtures and plywood and all the parts that go into construction. Is it going to face strong demand? If yes, then the sales of the company might be high, and therefore it might have good profits as long as it's run efficiently at low or controlled costs. Okay, so here's the story of that IPO. Home improvement and construction supply retailer Wilcon Depot priced its public offering at 5.05 per share, or at the low end of its indicative range, meaning they were thinking of selling the shares at around 7, and then they decided to bring it down to 5, so that whoever buys at 5 can still experience the share price moving up to 6 or 7. Ultimately, the share price went all the way up to 8, 9, 10, and it's still running at 12 today. So you might be justified in saying that it was a good IPO. The money that they collected made people happy, because whoever paid 5 pesos per share, now his investment is 12 pesos per share. And that's about double your money in a year and a half. At the time that it was offered, the 5 peso per share was close to 16 times the projected company earnings. I'll explain later what that 16 times means. It's a way of evaluating what stock is cheap or expensive based on how many times earnings is the price of the share. Additional information from the newspapers about the Wilcon Depot. And you note in the last paragraph that the offering received strong demand from institutional investors. The entire offering was more than 3 times oversubscribed, which means that if you had 100 shares to sell, people wanted to buy 300 shares. Okay, so as long as lots of people want to buy it, then they will be able to sell all of the shares and be able to raise all the money that they need to raise. Okay, what happened was they sold 1.393 billion primary shares, giving the company a market capitalization of over 20 billion pesos after the IPO. I think I have an example of that in the Excel sheet. One moment. Okay, here it is. So for the initial public offering of the Wilcon Depot, they sold 1.393 billion shares over here in the middle. And they sold it at 5 pesos per share. So if you multiply the 1.393 billion times the 5 pesos per share, they raised 7 billion pesos. Now you add that to the market value of the shares that were existing before, like these old shares, 2.5 billion, and then you get a market value for the company of 20 billion. So the new overall market value of Wilcon Depot is now 20 billion. How much did they raise? 7. How much was there to begin with? Well, there were 2.5 billion shares, but if you multiply that by 5 pesos, you get 12.9 billion shares, the new market value of those old shares. Now, question, is 20 billion big? Let's compare it with other PSE Index members. Is 20 billion big for a listed company? So let's take a look at the other listed companies. Today, December 14, SM Investments was 454 billion pesos. Let's look at the smaller ones. The smaller ones are at 18 billion pesos, 19, 28, 36, 35 billion pesos. So these are the bigger companies on the index. Let me explain this table. You have SM Investments, and the nickname is SM, and the price of the shares was 857. And then you multiply the price by the number of shares, which is 1.205 million shares. You're going to get a big market value. Now, not all of the shares are on the stock market. Only 44% are listed on the stock market. Let's move to the right side. Okay, so out of 100% SM Investment shares, 44% are on the stock market, and they call that the free float. It's publicly held, Meanwhile, the founder has closely held shares amounting to 56% of the shares. So therefore, this one is not on the stock exchange. It's in the hands of the owner. So what's in the stock exchange is the 44% multiplied by the price of 857. That's 530 billion. And then in the hands of the majority owner are 675 billion worth of shares. You total everything, it's, here's the number of shares, 1.205 million shares. And here's the market value, 454 billion pesos, excuse me. Ito yung market value of the free float. All right, so what's the free float? 44%. What's the market value of the free float? 454. So over here, let's go back to the middle of the table. 44% is the free float for SM Investments. So meaning the company SM Investments said, we wanted to sell 44% of our shares to the public. Okay, so 44% is what they said, is what's good for them. What about the others? Well, SM Prime sold 31% of its shares to the public, Ayala Land 52. All right, Ayala Land 52. So there, so then you have Ayala Corporation, 43% free float, and BDO Unibank, 45% free float. Others 51, others 21. So the free float is the shares in the hands of the public. Okay, so these are enormous sizes. You see, the biggest company has the market value of free float of 400 billion, and the smaller ones over at the bottom, 18, 19, 20 billion of the free float. And I was just pointing out to you a while ago that the overall value of Wilcon Depot was 20 billion. Yeah, it's now 20 billion after they raised the 7 billion there. So how did they arrive at the 5 peso per share IPO price? I think the process is like this. You check what's the net profits of Wilcon Depot. It's 1.39 billion during that year. And then the number of shares that they have is 3960, or sorry, 3960 afterwards. After the IPO, and then EPS, the profits divided by the number of shares gives you 0.35. So this big number here of 1390 divided by the 3960, you get the 0.35. So if you get the price of 5 pesos divided by the 0.35, you get 14, right? So 14 means whatever was the earnings per share of Wilcon Depot, you multiply that by 14 to get 5 pesos per share, 5.05 IPO price. And that is trading at a price earnings ratio of 14. Is that fair? Well, let's take a look. I'll show you the price earnings ratio of the other listed companies. So here's, for example, JFC. It's got a share price of 296, and then the earnings per share for 2018 is 7.1 pesos per share. So the 296 divided by the 7.1 gives you a 42 times price earnings ratio. Meaning the 296 is the price and the 7.1 is the earnings. So therefore 296 divided by 7.1 gives you 42. That's relatively high, higher than the others, and I would call that a Class A stock because it's at a high price of 42 price earnings, and yet it remains at that level for months and months and months. The other Class A stocks would be SM Prime Holdings, SM Investments, URC. So they are at between 42 and 21 times earnings. Whatever is the earnings here in the yellow column, you multiply it by 21, and you get the current price of Meralco of 375. Of course, what I did earlier was 375 divided by 18.2 in order to get 21. So all the stocks which have price earnings ratio of 21 and above, I call them Class A stocks, simply because they're the highest priced. And they don't seem to collapse into lower prices. They stay at a high level of prices. Sino naman yung nasa 19 to 13? So that would be Banco de Oro, Pure Gold, BPI, Ayala Corporation, and Globe Telecom, etc., all the way down to SMC or San Miguel Corp. Their price earnings ratios are running from 19 to 13. Okay, and I told you earlier that the Wilcon Depot was somewhere at 14, so a similar level to MBT over here, right? So these are the Class B stocks, price earnings ratio of 19 to 13. They're not the highest price. The highest price are these Class A stocks. They're not the lowest price either. So the lowest price are the Class C stocks, right? Okay. So by now you realize that it's not the price of the stock that matters, but you divide the price by the earnings and you get a number like 11 for PLDT. With the number like 11 for PLDT, you can compare it with Security Bank, which is 163 pesos per share, divided by the earnings of 13, and then you get 12 price earnings ratio. All right, so that's a Class C stock because it's running at 12 PE, 11, 11, 10, and the lowest is P Core at 6. These are simply less popular stocks. Lower priced because they have a lower price to earnings ratio. It's almost like gasoline versus premium gasoline versus diesel. So let's imagine that the most expensive gasoline is Class A, premium gasoline. What's next? Regular gasoline would be Class B, right? So Class B, somewhere in the middle. And what's Class C? Probably diesel fuel because it's used by the trucks. Okay, so that would be how you figure out whether your stock should be priced at a PE of 8 or 10 or 15. In the case of Wilcon Depot, before and after the offering, it was priced at 14 times PE, which means 0.35 of EPS times 14 gives you there 5.05. So that's roughly how you get the price. So you figure out what's the earnings per share, and then what's the appropriate multiple of the price earnings ratio. Multiply one by the other, you should get the IPO price. Okay, so let's say that you start with 0.35 EPS during the IPO year. What's in store for the company? Here's 0.35 of EPS for Wilcon Depot, and during the year 2017, it was priced at 6 pesos per share. This year, 2018, it's got an EPS of 0.40 per share, went up slightly, and then the share price is 12. Okay. I'm thinking that next year the EPS might move up to 0.46 and 0.53, and so the share price might move to 14 and or 16 afterwards. All right. So this would be the progress over time of the earnings per share of Wilcon Depot, moving up from 0.46 to 0.53 and up to 0.61, up to 0.71. And then the share price tagging along for the ride and moving up gently over time, maintaining an average price earnings ratio there. Okay, so this would be the progress over time of a new IPO stock. And look how good the progress was of Wilcon Depot. It started at 5 pesos, went up to 9, and then went down to 8, went up to 11 and 12, down slightly to 10, and now it's at 12. So it's staying there. It's like you can almost imagine a straight line moving up here, right? So the straight line moving up there, and what makes it go up over time is the earnings per share moving up like this from 0.35 all the way to 0.46 estimated. 0.53 estimated, and then 0.61 and 0.71. So that's the EPS moving up over time, and then the share price keeping pace, right? So by now you can see that earnings per share is really very important. That's what we're looking for in a good stock. Yeah, let me give you an example of a fictitious company. That's ABC Corporation. Let's say that we're reading the prospectus of this ABC Corporation and we're trying to find out, is this going to be a good stock to buy? Well, let's see. What's the profit in 2017 of this example corporation? 7 billion pesos. What's the number of shares? 1 billion shares. Okay, so 7 divided by 1 equals 7. Oops. How do I go back to the... Yeah. I'm sorry, guys. Somebody hit the... or wrong button. How do I move this? I'm sorry. Okay, so I'm gonna have to take a short break while waiting for the IT to fix this. Somebody interfered with our stream. Sean, how do you get that Google out of there? There. Okay, thank you. So I was saying that this IPO, sample IPO, is about a company called ABC Corporation with 7 billion pesos net profit, and then 1 billion shares, sample only. And then you get your EPS estimate over here, right? Okay, and then so therefore you you figure out what's the good price earnings ratio for that company. Let's say it's 10. So 7 EPS times 10 equals 70, right? And then you check what's going to be the prospects for this year. And then you say that it's about 20% higher, 25% higher. Okay, so it's about 8.8 multiplied by 10. 88 is probably going to be the price this year. And since the prospectus tells me that this company is healthy and is producing good sales and profits on an uptrend, then most likely the profits and sales might be able to go up, say 20% a year, at least in one scenario. So some analysts will say, I think its profits and sales can go up 20% a year. If that's the case, then the share price can also move up approximately 20% a year. 20% a year. So you can see the share price moving from 70 to 88 to 105 over the years, to 126 to 151 to 181. So here's a sample corporation which has had growing EPS since 4 years ago. Then you have a good estimate for the coming year, and then you have some idea of the rising sales and profits for in the next years to come. So this will give you confidence in investing in the IPO at a price that will give you at a price of 70, which is 70 divided by 7 equals 10. And then confidence that this could lead to the company moving up its share price to 88, to 105, to 126, to 151 over time. It really just takes time for the shares to start moving up, and the main driver would be the earnings. Okay, so if you're studying an IPO prospectus, you want to know whether the past has been good, meaning EPS has been moving up from 1 peso to 3 to 5 to the present day 7. And then the prospectus will tell you that this year we're thinking we'll get 9 pesos EPS for the coming year. And for the following years, we can't say for sure, but we're hoping or trying to work towards a 20% or 25% growth in profits over time. So you as the investor check, is that believable? Let's say for the sake of example that it's believable, it's like 70% probable. In that case, then I can invest at 70 and see the price moving up 10, 20% to 88, and then ride the stock over time because it fundamentally is good and strong. So the meaning of fundamentals is that it's got good profits and sales, and that the profits and sales are both rising over time, and you don't foresee any major roadblocks to that expansion. All right, so that's how to figure out how to price the IPO on year one, and then how to figure out whether the share price has any prospect or any hope of moving up over time based on the EPS moving up over time. So that would be I think for me, the main consideration. So in the case of Wilcon Depot, that was what we were looking at. The 0.35 was the EPS during 2017, and we were hoping to see that the EPS would rise over time. Okay. Okay, back to the PowerPoint. So So, okay, I've just seen that. What are they going to do with the money that they raised? Wilcon Depot raised 7 billion, said they want to use that to open new stores. The new stores will be in the form of large stores carrying 90 to 200,000 items. And each store would require 250 million. Okay, they know how to do that. Here's some old information about many years ago when Philex Petroleum was did an IPO, when Megawide did an IPO, Nickel Asia. So you can see that oh, this is the very beginnings of these companies. You can go back in time to see whether they did well. Let's look at the charts. Essentially, it's impossible to tell whether an IPO will do well. You really have to check the growth of earnings over time and be able to project in the future whether they will continue to do well. This is just a picture of how a business will start up, grow and expand, and then somewhere around this growth and expansion phase, do an IPO, and then later on get into mergers and acquisitions, and then be a major industry player. Okay. Okay. So skip this. Skip. Now here's the IPO process, where in the IPO you start with other people's money, venture capital, until you go to private equity, and then you're big enough to be IPO qualified, and then when you'll be in the stock market, and you're going to be finding it easier to borrow from the banks. Okay, so that was the IPO process. I'll go back to that towards the end to review it. In the meantime, I want to explain to you, why do companies offer shares, and why do ordinary people want to invest money in shares? What's the benefit to you? Well, number one, we should invest in general to make our money grow for various needs now and in the future. And as much as possible, we should let the money grow safely and as fast as the economy, because our economy is growing 6%, so your money should grow at least 6%. If possible, make it grow 8%. If you're smart, you can make it go 10 to 15% a year by investing in good stocks or good investments. We really need to make money grow at least 6% a year, because our inflation is running at 6%. We're hoping to bring it back down to 4% eventually, but in the meantime, make sure that your money is growing at the pace of the economy, 6+, and hopefully beating inflation, which is running between 5 and 6, and hopefully it goes down to 4. Here's what happens when you have inflation. Whatever you were buying for 100 pesos last year is now worth 103 pesos. And then next year is going to cost you 106 pesos. That means that in order to buy something at 106 pesos, you have to put down a 100 peso bill plus 6 coins of 1 peso each. So the value of your 100 pesos practically got reduced to 94 because you had to add 6 pesos over here, right? So that's bad for your purchasing power. If you take the 100 peso bill, you will probably have to cross out the 100 number on the left, and you write there 97. That's the true value of the money 1 year later. After 2 years, that 97 is not true anymore. You cross that out and you write 94. Because your 100 peso bill is now worth 94 only. You can only buy 94 worth of goods. That's what you call true purchasing power. How do you fight that? Well, you have to make sure that your money grows to fight inflation. Because inflation is bad. It means the cost of goods is getting bigger. Make sure that your money grows faster than that. Money shrinking over time. Look at this peso bill shrinking until it gets smaller, and one of these days we'll start using 500 peso coins. And then the money of the Philippines starts to look more and more interesting with these pictures. Okay, so therefore you should make your money grow and save long-term for your benefit. The best reason for investing in stocks, in my opinion, is to be able to save long-term for your benefit between today and the age of 60. Save money now so that you have pocket money when you're 60, and you don't have to work so hard to earn money between 60 and 90. That you should be resting and retired by that time. But so all the hard work needs to be done between today and the age of 60. That's when you start saving money, investing it smartly, so that it becomes a big pile of money by the time you're 60. Takes care of you until you're 90. So there are many good reasons to save. Save for your old age, plan ahead, and also keep some emergency money for the sake of your family. I know it's difficult, but it's prudent and responsible to have savings and to also make the savings grow. Sana more than the economy. The economy is growing 6, your money should grow more than 6. Right? So you have a monthly salary, you normally use it all for household needs, but as a responsible parent, you should also set aside money for emergencies. Meaning, I pray and hope that you never experience any emergencies, but just in case there's an emergency, have money just in case. So therefore, if you're going to be saving money for emergencies, saving money for retirement, try to put it in good investments that grow 8 to 15% a year. Later, I'll show you some examples. And also, if you are too busy to actually monitor your investments, then you can look for experts who normally called mutual funds or UITF, Unit Investment Trust Funds. These are experts who can professionally monitor your investments, just in case you're too busy to actually look after it day by day. But that's a good target, to let your money grow 8 to 15% a year. I'm going to argue to you later that Philippine stocks have grown 8% a year since 1988. I measured the PSE Index back in 1988. It was 600 points, and now we're running 7,500 points. That mathematically translates to 8% a year since the last 30 years. Now, I also measured the PSE Index since 2009. It was about 2,000 points. From 2,000 points on the index to 7,005 today, that translates to about 15% a year for the past 9 years. Okay, so kayang-kaya ng Philippine stocks, either 8 to 15%. So how do you get these results? For best results, invest long-term. Those who are willing to invest for 20 years, they can get 20% per year because they're bold, they're brave, they're patient. They can put their investments in money that go up and down violently, but they produce average returns of 20% per year. If you say you only have 10 years, then you have to be more cautious. Place money only in blue chips that move up between 8 and 12% a year. Okay, and then if you say that you only have 5 years to invest money, oh no, I think you have to keep your money in government bonds or other instruments that earn 5% a year. If you absolutely don't want to have 0 or -5 on that investment, put it in bonds, right? So where do you put money for 10 years? I suggest blue chips. And where do you put money for 20 years? I suggest second liners, the volatile stocks. For example, Megawide, that one's a good one. Our company thinks that it's 19 pesos now, but it's headed for 29 in about 12 months. So that's about a 50% gain. See Robinson's Land, we think it's now 21, heading up to 25. So you can make 15% over the next 1 year. So, okay, so go into nice second liners and blue chips. Now, invest time in learning. I congratulate you for taking the time to listen to my boring presentation. It's you're investing time in learning, and you want to figure out how this investment or this stock market thing works in general. It's like you learning how to drive a car, learning how to cook or bake. These are important life skills. So I actually teach class every week, Introduction to Stock Trading on Investment for Beginners. And I do this in Luzon, Visayas, Mindanao. I want to invite you, if you want to write me an email, if you want to invite me to go to your city, or if you want me to speak to your association, I'll give you the class, and my company will sponsor it. I also occasionally get invited to explain matters on television because usually there's some economic news, and then the TV studio wants to know, how will it affect the stock market? Will it make it go up or down? And it's my privilege to have been invited once or twice to shed light on some of these economic news and political news to see whether it will push the market up or down. Okay, so I give comments. Okay, number 3, I would like to invite you to see the benefits of the stock market, how they can make your investment move up in value. So here's the index since 2006, up and down, but since 2009, look off from 2,000 points on the index, it started to move up convincingly to 7,005 at present. This is, for me, a generally upwards trend. You will see it better when you focus on that blue line, which is the moving average 50 periods. Is the line moving up over time? Yes. So this is the average. If you focus on the day by day or month by month movements, you will be terrified by the ups and downs. So more than focusing on the day by day or month by month, look at the long-term blue line, which is pointing upwards over time. That tells you that we are on a growth path. Not all stocks are on an upward growth path. Look at PLDT. Sideways here, and then 2003 to the, from 2003 onwards to 2009, tremendous move up, because that's when they started emphasizing smart telecom sales. And then the more internet they sold, the less money they made, because people stopped making text messages and they just send messages through Viber, through WhatsApp, through Skype. They make phone calls through Skype. So PLDT had some difficulty adjusting to the internet age. Here's Globe Telecom, which had a very exciting 1995, and it had a lot of sales. And then down it goes, and then up again it goes, down slightly because of the Asian financial crisis, and up sharply. That's too much, up sharply, and then it comes down to this level over here. So I think since 1998, it did go up over time. So that's the trend in growing sales and profits for Globe Telecom. So Jollibee Foods, if you invested in Jollibee at 10 pesos per share, or even 50, or even 100, or even 150, it's now at 290 thereabouts. So this one is like an airplane rising to the sky. Imagine an airplane taking off over here, and then clearing, flying over Laguna Lake, and then going up to 30,000 feet. Amazing. Look at electricity. Is it a good idea to invest in Meralco? Well, yes. Look at the share price 2005, 2003. It was like 20 pesos, and then now it's 300 plus. So imagine if your 20,000 pesos back then is now suddenly, is now suddenly 300,000 pesos today. So that is not boring. I think that's very exciting to be in stocks in general, and especially Meralco, because if you are a stockholder of Meralco, you own a business where everyone is practically required to buy their product. Here's the MCI Holdings, which has a very impressive run-up since 2005. Oh, imagine that. I'm not asking that you go back in time in a time machine, but I'm asking that you start buying the stocks today and wait for time to pass, and then you might experience a shooting up, just like from this. Look at this stock from 2008, level of 1.49 pesos, umabot ng 11, 12, 13, 14. And where is it going to be 10 years from now? Maybe over 20, maybe. Okay. Or look at Ayala Corporation. It used to be at 200 pesos per share, umabot ng 600, akit ng 800. Is that too high? Is that too much? Umabot pa ng 900 plus, 1,000. Where will it be 10 years from now? I don't know, maybe 2,000. Right? So as long as it's surging upwards year after year, then you have a good reason to get into this stock. Or any IPO prospectus that comes along that is some eager beaver young company that promises 20% profit growth. Look at SM Investments, used to be 100 pesos per share, umakit ng 900. So your money really moves up. If you bought Rockwell Land, I'm sorry to say, from 750, your investment went down to 2. They seem to make very good buildings, but the profits are not so nice. And then Victoria's Milling, not competitive, 18 pesos per share, dropped all the way to 265. This is publicly available information, can't hide. Asia United Bank, why did it drop so much like this? Maybe the IPO was priced too high. And then hopefully it will recover. It seems that it's on the way up now. Philippine Business Bank, IPO, dropped, tried to recover, dropped again, tried to recover, dropped again. So, and then SSI Group, what happened here? It was sold at 8.87 IPO. Not all IPOs go up. This one divided by 3. Okay, so be careful buying an IPO. Make sure that it's priced right and that the company has good earnings in the following years. What's happening to Philex Mining? They had a very exciting 2012, and then after that was downhill all the way. I suggest that you only buy the stock if you're an expert in mining trends and cycles. Same with Surpass. If you're an expert in technology, then you can explain to me why it had a very exciting 2016 and then a very depressing 2017. So not all stocks are good, some are bad, and some trends are bad also. Now corporations struggling to be a third telco player with lots of ups and downs. Okay, so it depends on if it's going to have a bright future or not. So these are some of the stocks I wanted to show you because you eventually will want to study them. And like a good grown-up, will start saving and investing, hopefully in these exciting stocks, because you're going to be responsible from now on. You want to be saving money, but not saving money to grow 1%, huh? You want it to grow 10 or 15%. You just have to exert effort to save and invest and put it in good stocks that can grow sana 8 to 15% for the next 20 or 50 years. By the way, why would you want to save money for 20 years? Well, for the sake of your, let's say you have young children who are 1 year old. By the time they're 20 years old, they're going to need help with their, say, master's degree or with starting a business. So you start saving money now so that when they say, Dad, I need money to be able to start a business, then you will say, I have been saving money for the past 20 years. And then why do I say 50 years? Because you might love your family and say, I want to set aside money so that in case I have descendants like grandchildren who will one day come to me and say, Lolo, I want to run for mayor, or I want to run for governor, or I want to run for senator. And then you will tell him, tamang tama, I started saving 50 years ago in order to, I'm waiting just for this opportunity. It may not be running for office. It may be a grandchild saying that he wants to start a business or he wants to study medicine or law. And then you can say, I'll take care of your tuition. Okay, so invest long-term like planting a tree and building an orchard, and then earn lots of cash dividends and let the investment value rise as the economy grows, right? So, the PSE fosters market education. First Metro Securities also teaches people how to invest in stocks and mutual funds, and Metrobank offers trust accounts to its clients. I'm here with First Metro Securities, which is under First Metro Investments, and our sister company is a mutual fund, which an expert who allows you to invest money should you want to entrust your money to an expert. Metrobank in turn is owned by GD Capital. Oh, this is me. So you'll find me in the office, and this is me again. So write me on that email address if you want to invite me to come to your town or to your city or to your association and your office. Okay, back to the topic. Let your money grow for several stages in your life cycle. Let's see. Oops, what happened? How do I go to the no, not Excel, but to to the list of there. Okay. So I'll find the right slide. Hang on a minute. Sorry, pressed the wrong slide. I'm going to talk to you about shucks. Okay. Sorry. Faster this way. Okay, I'm going to skip the inflation stuff and then talk to you now about what is the stock market. Okay. Well, skip that because I'd like to go back to IPO. This one. Okay. So, how to buy stocks using cash? Open an account with any stockbroker. At least in my company, you just have to go to the website and click on Get Started Here, and they'll help you out. What is a share of stock? It's part ownership in a company. You get invited to be a co-owner, and you're no longer just a customer, but you become one of the owners of the company. Because of that, you receive this beautiful certificate, stock certificate. You're the proud owner of Manila Electric. You're Miss Long-Term Investor or Petron Corporation, right? And In the modern era, we just use this plain paper and it's just as valid that you're the rightful owner of the shares. They'll accept that in any embassy as proof of wealth. Again, you give money to the company and the company uses the money in order to expand its business, to have more sales and profits, so that all owners at the end of the year receive a share in net profits. And then the net profits lead to cash dividends and the price of the common shares goes up. Wait, I think I'm gonna have to fast forward this one because I showed it earlier. I'm gonna fast forward this one. Wait a second, how do I escape again? Okay, so here again. You can freely download a copy of this one. I think I'm gonna have to go back to, wait a second. There's something I wanted to show you. Here, okay, so I have 10 minutes to go. Let me talk to you about the index again and what the prospects are. So remember that this would be the appearance of an index where you have the top 30 stocks and all of them have a price per share times the number of shares equals the market value of the shares. You sum up the market value and then it's a big number, which is in the billions and billions of pesos. It's so difficult to talk in terms of billions that we devised a shortcut. It's called the PSE Index. Whatever is the billion pesos of those top 30 stocks back in the 1970s, it was set equal to 100 points. And then, so we started with 100 points. So therefore, 100 points is the starting point. And if the prices of stocks move up 1% today, then the index is now 101 points. If the prices of stocks go up another 1% tomorrow, then the index moves up to 102 points. Okay, so it started at 100 points and now we're at 7,500. And that's why I say I measure that, I measured the progress of stocks from 1988 to the present. It's been going up 8% a year. So you can rely on 8%. Here we are, 800 points in 1988, and then we reached 7,007 over here. I would say that there is a phase one in the Philippine stock market. This was during my early career. I was a young stockbroker in 1990, all the way to the Asian financial crisis. And then lots of people got laid off. Okay, and then there's a phase two here when we had a reawakening, when the stocks started shooting up over here. And then starting around 2015, I do believe that we have another phase where we're going at a slower pace, but still upwards. So, okay, so the yellow over here is phase one. The green moving upwards is phase two, and the blue moving sideways, still upwards, is phase three. So don't say that the stock market's down. It's moving, still moving sideways in a band, meaning that there's a channel where it moves up and down. Don't say, don't just look at 3 months of data and say it's down. You should look at years of data and you will see that it's generally still uphill moving. So where do I think it's gonna go? I think it's gonna go sideways like that. Maybe there's one scenario where it could still hit 8,000, maybe end of the year or middle of next year. Maybe still hit 9,000 next year and then decline a little and then move up again. Okay, so that is the meaning of the wide band of sideways, generally upwards. So I think that we could be going something like this. So tell me if you agree. Tell me if it's doable. Tell me if the country is still on the growth path. Tell me if the economy is still growing, 6% a year. If yes, then this is doable. I believe so. All right, so we're now at 7,500. The lowest point was 6,900 a few months ago, and I think we're still going to be in the middle of this yellow band. Okay, so who says that the stock market is going down to 3,000? Well, if you suddenly have negative or zero economic growth, maybe, but I think it's highly unlikely. Okay, so I assume steady 6% economic growth and intense economic activity, kaya pa yung sideways, generally upwards ng stocks. So in the past 30 years, we've been up, we've gone up to this level over here. I think kaya pa over the next 20 years to hit these levels. Feel free to download the presentation and to look at this chart and then tell me whether it's doable. Okay. If you want to know more, all our answers. And at this point, I'm going to also tell you that I have a Facebook group, Basic Construction Investing, where I allow you to join for free and download the files. And then please follow Prospective Securities on Viber public. Okay, now I gotta go home again. I'm gonna go back to the very beginning. Okay. Okay, good. Okay, so yeah. So I just wanted to go back to the beginning and explain that the IPO process here. Okay, so for those who just tune in the middle, just to explain again, the IPO process is what happens when the company owners, they need more money to expand the business and they want to expand the factory. So therefore, if they want to expand the factory, they have to raise capital by selling shares. And the example that I gave earlier was Wilcon Price's IPO at 5 pesos per share and raises 7.03 billion. Okay. And they sold 1.393 billion primary shares, giving it a market cap of over 20 billion after the IPO. Here's what happened. They had 1.393 billion shares. They sold it at 5 pesos per share, and then they raised 7 billion. Now, if you add to that the old shares of 2.5 billion, then total of 3.960 billion shares. And if you multiply the 3960 by 505, then you have a new overall value of 20 billion. So that's what happens. You sell 1.393 billion new shares in the IPO, and then you sell it at 5 pesos, and then you raise 7 billion. And you use that to expand the business by opening new stores. You as a, wait 1 second. You as a, yeah, okay. So you are evaluating whether to invest in Wilcon Depot. It actually was a good idea over time. Look, if you invested 5 pesos per share, the company pushed through with its plans to expand, and they did have very good sales and profits in the years after. So this is a gently moving upward climb all the way from 5 pesos to 12. Well done, good performance. How could you predict that? You have to look at the EP earnings per share of the company and check whether it's forecast to move up over time. So when you read the prospectus, you check to make sure that number one, the economy is fine and that they're facing strong economic demand for construction and construction materials. And number two, that the company is well managed and that they can actually sell stuff to the growing economy so that they will have strong sales and strong profits. With strong sales and strong profits, the EPS will move up over time. If the EPS is moving up over time, like this blue line, then like this purple line, the price of the stock will be moving up from 505 to 12 at present. Maybe next year 14, maybe the year after that 16, maybe after that 18, maybe after that 21. So you do this with every company that you get a prospectus. You check whether, how's its EPS? Okay, how's its ability to generate profits the next few years? If it's strong, then I can expect that the profits will be good, strong, healthy, and moving up. And then my investment will keep going up from 5 pesos to hopefully 10 or 12 or 14. It looks like those prospects were all, they all came through when it comes to Wilcon Depot. So it does face strong construction demand and infrastructure demand, and everybody needs to install new stuff in their houses. Okay, so I guess that's the shortcut of how to analyze an IPO. I'll take questions from you. This is my last illustration of what happens when there's a company that is profitable at 7 billion pesos, and then it has 1 billion shares total after the IPO. So therefore, 7 EPS, and then the price is 70. 70 divided by 7 is a price earnings ratio of 10, PER of 10 times. And then the PER of 10 times can be presumed to be constant as the EPS keeps growing up over time to 9, to 11, to 13. Then your share price also keeps moving up from 70. In this example, you started at 70, and then 88, and then 105, and then 106, 126. I'm going to erase this because it's before the IPO. Okay, so that concludes the discussion on the logic of going into an IPO. I think I am. Yeah, so this is the logic of going into an IPO. You had some shares before, and you have to sell additional shares at this price so that you raise 7 billion pesos. Okay, I guess there's time for questions. If you have a company that you want to list at the PSE, contact Mr. Villar. And then if you want to invest in new IPOs, watch out for the announcements and check whether the earnings of the company will be good and strong. Feel free to ask questions.